This is part 2 of our chapter 3 video lecture, where we're going to focus on the first type of income mentioned here in chapter 3 called employee compensation. Let's take a look at the 1040 form. The first dollar amount on this 1040 form is in line number 1, which reports the wages, salaries, tip income, all coming from a W-2 form or forms. So if you have the two spouses listed up here, both working, they're probably going to have a W-2 form each. Or if they have multiple jobs, or if they change jobs during the year, or if they have a lot of part-time jobs, you know you're going to have a lot of W-2s, one from each employer. And you're going to combine amounts on the boxes 1 on each W-2 and put the total here in line number 1. So let's take a look at a W-2 form. So here is the name of our employer with the address, and here the employer ID number. All of this information here on the W-2 probably has to be re-entered. Let's make sure this is a W-2 form here. Has to be re-entered in the tax software program. Again, if you're doing it manually, you have to add up the amounts, probably using a spreadsheet, add up all the boxes 1s for each of the W-2, all the boxes number 2, yeah, for the total federal income taxes withheld from all the W-2 forms. There's other taxes withheld during the year besides income taxes. Here you can see Social Security and Medicare taxes were withheld based upon possibly a different total income here in boxes 3 and 5 as compared to box number 1. Also make sure you double check the state information here at the bottom. The wages for the whole year in box 16 many times is the same number as you would see in box 1 unless the federal laws are different than the state laws. An example would be here in Hawaii. If you work for the federal government as a civil service worker, you may get an extra benefit from the government called a cost of living allowance or COLA or T-COLA, where this extra amount you get for the higher cost of living here in Hawaii. Also, for people who live in Alaska, they get this extra amount in addition to their regular salary. Hawaii, the federal law says the COLA is not taxable, so it's not here in box number 1. But Hawaii says you take the amount in box 1 and you add this extra allowance, and we're going to tax you on it here in box 16 for state purposes. Alaska doesn't have any individual income tax, so it doesn't matter. It's a moot point. But here in Hawaii, we do have income taxes. So the COLA is taxable to Hawaii, but not taxable to the federal government. Another difference between box 1 here for federal and box 16 for Hawaii is if you're an employee of the state of Hawaii government or one of the counties here in Hawaii, you may be required to contribute to your own retirement, your pension retirement plan. So they're going to take that money out of your paycheck. The federal government allows you to reduce the taxable wages here because you're going to pay taxes eventually when you start drawing the money out of the retirement account. But Hawaii says, no, you're going to be taxed on that amount, and they're going to add it back in here. That amount they add back in is from what they call the employee retirement system. Yeah, so you take the federal wage, you add that, and you make the Hawaii wages bigger. And of course, hopefully they withhold enough state income taxes to help you pay your tax liability for the year. We don't have any local income taxes in Hawaii, like a city tax. Like if you were working or living in New York City, or I've seen some counties in Ohio also have a local income tax. There's 2 lines down here for state. So let's say that you were working in Hawaii for the beginning of the year, but you move to California and you still work for that same employer for the rest of the year. So these wages here for both should probably add up to the wages you have for federal for the year. Again, copies of this W-2 form, you can see here, this one will be mailed to the federal government if it's not already done electronically by the employer. Another copy, this one is kept by the employee. Let's see if we have more copies here. A copy is for attaching it to your state tax return. Probably a copy is kept by the employer. More and more, these are just digital. And in fact, if the employer uses a service online, possibly the employee can actually download this information right into their own tax return without retyping anything. There's other boxes here. Let's go through. So this is the income, wage income that's includable on the 1040 form. So here is wage income that is subject to Social Security tax that's also withheld from the employee's pay, and maybe the same number here for Medicare wages to calculate out the Medicare tax. Let's talk about tip income. If you take a look at the 1040 form, it mentions that this line 1 should include tip income. But there's different rules for tip income based upon the dollar amount. In our textbook, it mentions that if the employee receives less than $20 of tip income during the year, during a month, then they don't have to report that to the employer. But you still gotta include it here in box 1 for the year when you do your tax return. Now, if you receive $20 or more per month, then the employee should be reporting that tip income to the employer. So the employer is now going to withhold extra taxes, extra income taxes, Medicare and Social Security tax. That's if the employee receives more than $20 per month. So many times the customer will just leave a cash tip on the table and the employer would not know that. Yeah. Sometimes the tip is on the charge credit card receipt, so the employer would know that. Yeah. And again, if the employee receives less than $20 during the month, they don't have to report it to the employer. They just include it here in box 1 and pay income taxes on it and not pay any Medicare and Social Security tax. But if you receive more than $20 per month, then you should report it to your employer. So the IRS gives some suggestions of how you should do that reporting here on this publication, IRS publication 1244. And it gives you some examples of forms you can use to keep track of your tips per day. So here's the tips that the customer paid directly to the employee bypassing the cashier. But here's what's put on the bill, credit card, so the employer again should know that. Many times, tipped employees will share their tips with other employees. So here's the amount being paid to other employees and their names. So these employees now gotta have it taxed, possibly to them. Okay, so if the tip income is here and is also being reported to the employer by the employer knows that it should be included here in box number 1. If the tips were never reported to the employer, then it's not here in box number 1. In all cases, tips are subject to income taxes, be it here on the W-2 or not. Okay. If the tips are less than $20 per month, it is not subject to Social Security taxes. Now, if it's more than $20 per month and it was not reported to the employer, you still gotta report it, right? So again, you're going to include all the tip income here in line 1 of the 1040, be it in the box 1 of the W-2 or not. And you're going to pay income taxes on it. And if it's less than $20 per month, it's still here now, but it's not subject to Social Security and Medicare tax. If it's $20 or more per month, now there's a special tax we got to add on to the income tax here on the 1040 form. And that special tax is reported on this form called 4136, where we would put down each employer the taxpayer worked for and how much tip income they had received during the year. Total cash tips and charges you received, even if it was unreported. So this is everything. And then here, cash tips and charges you reported to the employer. So this is already on the W-2 form also here. Okay. So we would take the difference between these two totals, and that difference here in line 4 is the amount of tips that's not reported to the employer, but you still got to add it back in to line 1 of the 1040 form and pay income taxes on it. Now, one of the main purposes of this form here is not just to calculate the amount of additional income subject to income tax, but to calculate out the additional Medicare and Social Security tax. So that amount that wasn't reported, unreported tips, you gotta have it now taxed here at these two rates. One rate for Social Security, this is 6.2%, and then the other tax 1.45 for Medicare tax. So you extend the amount down here for that tax. Okay. Again, this is in addition to income tax. And you would put it on this schedule number 2. Let's see if I have a schedule 2 here. Schedule 2, line number 5, and you would check off this box here, and then that Medicare and Social Security tax on the unreported tips, and you add it up all to these other miscellaneous taxes. And then that goes back on the 1040 form. We already know how to calculate out the income tax from chapters 1 and 2. Here, the income tax goes here in line 12A. And here, and now coming from schedule 2 would be that additional tax being added in to get a total for line 12B. Okay, so again, that's for tipped employees who are subject to both income taxes, by including it here, and the Social Security Medicare tax calculated on this form 4137. Now, there's been quite a few companies here in Hawaii that have employees with tip income, especially in Waikiki, where there's the hotels and restaurants. So a few years ago, they got audited for this unreported tips. And eventually, it forced employers to do something called, let's take a look at the W-2 form. Here in box 8, the employer is going to artificially calculate, depending upon the number of employees in the company, a tip income amount that the employee has to report unless they have better records to show how much tips they have. This tip amount, if you do see it here in box 8, is not included yet in these numbers here, wage income and the Social Security Medicare. So if you see a number here, you probably got to add that into box number 1 and then put the total over here in line number 1 of the 1040. Also, you have to pay Social Security Medicare taxes on this amount. So you have to go also put it on this 4136 form in this total column over here. Okay, it wasn't reported to your employer, and they're reporting it to you, so you have to put it over here. Okay, and then you're going to eventually pay that total 7.65% on that unreported tip income. Okay, so be careful, especially in Hawaii where we have a lot of tipped employees. Some additional income that may be here in line number 1 is if you have taxable scholarship income. The general rule is scholarship income, I think we're going to see in chapter 4, it's tax-free as long as you use it for paying qualified education costs. But if you have a lot of scholarships and a lot of grants, educational grants, that are more than your qualified education costs, that excess scholarship and grants is taxable, and you would report it here as wage or salary income. And of all the different incomes, that's probably good to put it here in line 1, because if you remember back in chapter 1 or 2, when we calculated out a dependence standard deduction, there was a calculation based upon that student, that taxpayer's earned income. We're treating that scholarship income as earned income to probably increase the amount of the standard deduction they can claim. Sometimes I've seen scholarship income erroneously reported as miscellaneous back here in Schedule 1 and not treated as earned income. It should be put here in line 1 to help the taxpayer probably get a bigger standard deduction. I think that's it we covered regarding employee compensation here in chapter 3. So move on to the next topic. That's again, we don't cover business yet here in our classes for next semester. We'll prepare a Schedule C next semester. We'll talk about in our part 3 video tax effects of being divorced. Okay, so go ahead and take a look at that video.